Good morning, everyone, and welcome to what promises to be a very interesting panel. Our time has been cut by 5 minutes, so I'm going to spare the introductions of everyone. You have it to read in your booklet. What we're going to be discussing with financiers, investors, and a hybrid investor financier is what are the mega trends dictating new markets. So we have an environment of rising interest rates, high inflation, instability, market instability, currency fluctuations, quite rightfully so, a pressure for us to invest in environmentally sustainable investments with all what is happening on. Where are these trends are going to come from? And we're not talking only geography. We're talking assets, we're talking markets, financial instruments, and the great panelist is going to lead us to where we are. And then who's going to dictate these trends? Is it the financiers, or is it the investors? Or is it the two of them fighting and convincing each other? I'm going to start my first question with our hybrid investor financier, Fahad Saif. Fahad, what are the economic trends that you see shaping tomorrow's investments, returns? And how should the investors position themselves to take advantage of these trends?
Thank you, Lubna. Bismillah ar-Rahman ar-Rahim. Good morning. Glad to be here in this fantastic gathering and fantastic information and exchange of ideas. I think it's simple. It's an equation of an alpha and beta that the investors are fishing for across, as you rightly mentioned, the asset, the vehicle for me to participate in that asset, and the geographical exposure that I'm taking across the asset itself. Obviously, sustainability, advancements of technological sectors like AI and space, logistics, supply chain security, the current risk that is going on the shifts on demographics is dictating set of benchmarks when it comes to how much exactly I should be investing, or where should be investing, and what sort of alpha, and how can I mitigate the risks that I am exposed to. And you rightly mentioned, if I am an investor, how could we structure asset classes or vehicles that could at least sponge the volatilities and the exposures and the mini black swans? Similar to what we're seeing nowadays, the high interest rates is sucking up all of the value.
Yep.
So have I made the wrong decision at the time when I made the decision? Absolutely not. But maybe investors would require more of creativity and innovation on asset classes or vehicles where I'm willing to give away a bit of that premium to ensure that I have made the right decision and avoiding the black swans or the mini black swans exposure. It is also important that if everybody is focusing, everybody is thinking alike on focusing where should I invest in terms of sectors. However, which among the governments and geographies are sponsoring and leading to deploy and to invest in particular certain sectors where I can at least run and join the wave of that particular jurisdiction. I'm going to use this as a segue on what is happening in the kingdom nowadays. So the national investment strategy through the central government is very much focusing on investing $3 trillion on the sectors that we just spoke about and all of the panels that has been spoken about earlier yesterday and today. The $3 trillion that the government is sponsoring through multiple programs like Sharik, PIF, NDF, the private sector, and obviously the business as usual that the government is spending, it does give you the assurance that if I invest in this particular jurisdiction, at least a lot of the de-risking has been made. And therefore, I can make a better decision. And therefore, I could ensure that that particular investment decision is unavoidable for me to pursue at least. So I think, again, going back to the alpha and the beta is how exactly you are able to dissect all of these variables and ensuring that you have the maximum certainty and to avoid the volatility for you to pursue the right investments.
Thank you. It's great. segue to our financiers friends, Tyler and Jim. How do you see the global megatrends around the world playing? Are they equally adopted by all the regions? Fahad here spoke about what we're doing here.
Yes.
But
Thanks, Lubna. First, and thank you for moderating, and it's an honor and a privilege to be part of this august panel. Citi is the most global bank in the world, and so we're in 80 countries, so we have a unique perspective on geography. But before that, I want to pick up on the sector view. I think three areas that we see extraordinary growth and megatrends where we can finance and help return and create job growth and opportunities and investable assets is obviously the technological revolution that's being empowered, and we've already talked about in this forum, empowered by artificial intelligence, which we think will obviously drive productivity and is a game changer that'll influence growth and technology investments, but also financial services, financial technology, and consumer investments. The second trend that we're excited about is obviously energy transition. The kingdom plays a critical role in this, in leadership in this regard. But we see this as an enormous responsibility and opportunity with a $125 trillion problem to solve. And I think that's an area of growth and significance from a sector perspective. The third area that we're excited about is the future of healthcare and the evolution and revolution going on in science. The opportunity for us not only to solve illness, but also focus on wellness. Those three mega trends, from our perspective, fit in multiple geographies. Now, from a geographic perspective, I just spent the last 2 weeks in China, India, the United States, which is my home base, and I'm happy to be here in the kingdom. There are different perspectives on growth in these areas, but I would say, generally speaking, the long-term trends are positive. Obviously, we look at the kingdom in India as two shining stars. We look at South Asia in a China plus one environment, and we see new corridors of opportunity where the kingdom, being in the middle of the world, can be a gateway for new corridors of flows of capital activity to the east and to the west. And all of those excite us because that's going to generate returns for investors and give Citi an opportunity to help with economic growth and progress in those geographies.
thanks. Jim, do you like to add something?
Yeah, I think Tyler covered a lot of it. I think if I bring the two conversations together, megatrends, as you said, some of them are brought by governments, some of them are brought by central banks. And if I think about today, with the trend of the last year and a half of higher rates, that is having a dramatic change. I think people forget pre-COVID, the global GDP was, I think, 95 or 96 trillion. Fiscal and monetary stimulus post-COVID or during COVID was almost half that amount, which is kind of an astonishing number if you think about $45 trillion globally flushing into the system.
Yeah.
And while it allowed us to come out of the depths very quickly, the excesses of those were unclear. They're still starting to, or they're still showing themselves in the marketplace. The downside was money was free. A lot of risk was taken because the view was it wasn't the loss that they were concerned about, it was missing out on the opportunity. And I think the challenge today, some of which has been highlighted in differentiating beta and alpha, higher interest rates, and particularly in the US, viewed as a safe haven, if you will, for US Treasuries, 5% yields in the short end of the curve force people to not make decisions. I'm comfortable. It's okay to earn 5%. I'm not missing anything today. The danger, and the biggest danger of that, is a number of the initiatives that Tyler spoke about. It's going to be more expensive for those to get financed. Investors need to get paid a higher return. If this was a year ago, maybe 2 years ago, if we were sitting here, if you talked to someone, 10 to 12% return sounded phenomenal for unproven technologies, unproven industries. We just had I forget the exact name of the company, but it was a $4 billion valuation company that went out of business in the past 2 weeks. These are incredible destruction of wealth. Yet if you look at some of the broad indices in the world, things seem as if they're okay. And I think there's, using the duck analogy, on the surface, everything looks calm. Underneath, there's a lot of paddling.
Following on this, I mean, people, you go for new frontiers, higher risks, higher
Yes.
returns. But I guess what you're saying, in this environment, people are going to take less risk?
The returns to take risk, to draw you in to take risk, are increasing. And that's dangerous because that's going to prevent capital from flowing to innovative industries, innovative companies, and we all know that there's a lot of innovation required to achieve some of the health, wellness, renewable energy, and other initiatives that everybody's pursuing in their own way.
Nakamura-san, we've all heard after COVID, global supply chains issues and production patterns. What insights can you give us about investment opportunities that are affected by these shifts?
Of course, changes and diversification over supply chains and manufacturing bases are creating new investment opportunities. In the case of manufacturing sector, such as automobile sector, the risk of cross-border supply chains was reviewed and recognized by us during the COVID. And also, more recently, the rise in political or geopolitical risks has a big impact on the manufacturing of strategically important products, such as microchips or medical supplies and food. So onshoring or nearshoring or bringing back manufacturing into home country or like-minded countries are being considered very seriously by many. For example, there are cases such as TSMC, a Taiwanese semiconductor manufacturer, investing about $7 billion to build a factory in Japan, which is probably seen as a safe destination for a large-scale investment. And these shifts have already disrupted the equilibrium that many multinational companies have come to enjoy in the last decade. So we can perhaps say that localization is now becoming the globalization.
So we're seeing supply issues have led to onshoring, and onshoring provided opportunities. I think the same Taiwanese companies also investing in the US.
Yeah.
So these are great opportunities. All right. Also, I'll come to you, Hisham and Fahad, the investor, and would like to hear from an investment point of view and financing point of view. These recent global economic development, how has your organization adapted its investment strategy to capture the growth in these new markets and asset classes? Hisham, if you can give us the perspective from an investment.
Yes. So we have adjusted our focus, and we try to benefit from all those trends. Recently, we focused to benefit from 3 key areas. One is the higher interest rates. So we used to invest a lot on the States and stabilized assets. Today, it's more appealing for us to go in preferred equities and into premium lending or private credit in the States and also in the region, because those now, they give you the 14 to 18% IRR in some cases, which makes you wonder, like what we discussed earlier, why should you go and take an equity risk? You get a lot of protection and a lot of securities. Similarly, we are doing also in the region. You see a lot of commercial banking cautiously growing because of the higher environment of interest rates. There are, of course, risks associated with the quality of risks and all of that, but this is an area we try to benefit for us and for our clients. We closed a fundraising recently for Youth Opportunity Fund, $250 million, primarily invested into those sort of asset classes. This is one area. Another area is we focus on the growth in the region, and we see this drives, especially with the Vision 2030 and Saudi Arabia over the last coming couple of years, driving and leading, and the whole region. And we see this as a major opportunity for our investors to invest into Saudi Arabia with a lesser risk of financing. We think Saudi Arabia offers a lot of opportunities. We focus on healthcare, education, and we think those two verticals are underserved when you look into the northern and southern of Saudi Arabia. We call it the secondary cities strategies. The Riyadh, Jeddah, and Eastern, they are more served and more mature. However, there are a lot of opportunities in medical and education in the secondary cities. We have announced yesterday acquisition of major healthcare facilities in the south as a part of our healthcare strategy. It's 1.3 billion Saudi riyal, and we are expanding into that. The third area is, of course, the logistics. We have invested during COVID a lot in the likes of Amazon to be more the last mile delivery. And now we see the logistics needs more into this area, and with the reshoring and the new Silk Road plans to be done, where the Gulf also being and Saudi Arabia being a key part of the chain. And in logistics and in food securities, we have also invested and 1 billion.
You've done a lot of investing.
Yeah, you like that, yeah?
Love that. Okay.
So I'm just trying to highlight that we follow the trends, and we used area to plan long. Now we try to, I think the challenge and to differentiate investment manager from others is to take the clients into safer investments, lower risk, and can adapt with the opportunities, because whatever we are talking now, I'm sure after 6 months, it's completely different priorities.
Fahad, if you take this question from the financing point.
Advice number one?
Yeah?
keep the bankers at your side. Now,
I think they all nodded in agreement.
We're here.
On a serious note, I'll just give you what is going on in the kingdom. At least I have seen the two layers, the central government and now PIF, going through this hyper and the CapEx super cycle that is aiming for diversifying, decarbonizing, digitalizing, requiring a lot of capital to be persuaded to come down into the kingdom across all of the layers, central government, public sector, private sector. We tend to focus on the managers who manage the asset. And I genuinely believe, based on my experience, I think the liability side is as important as the asset. And a lot of gaps that comes from the liabilities, therefore the mismatches that happens between the assets and liability side, and therefore the risks and the exposure. Putting together a medium-term capital raising strategy that all of the layers within the institutions to agree on, including the partners, whether the investors or the financial institutions and the bankers, reaching out to the investor. Today, the investor dictates the terms of the decision and the terms of the transaction itself. Having predictability and certainty to raise capital at any point of time with an acceptable risk parameters at the fair price that you live in is the objective that you wanted to achieve. In the case of the PIF, we have set and put together our medium-term capital raising strategy that focuses on the vehicle, the market, the investor, i.e. meeting the investor, communicating with the investor, the lender, the provider of the capital is extremely important to ensure that he is not surprised when there is a market volatility with an action or a potential update that he might not be aware of, where it could change his decision on his investment. So keeping him as appraised is to avoid surprises. On the asset classes, it evolves every day, as my colleagues mentioned. The creativity and innovation is there. Recently, we were very successful on launching our debut Sharia-compliant sukuk, which was very convenient to the Sharia scholars, which they have approved it very quickly, and therefore the participation has been tremendously well. In a situation where it was a bit uncertain, 7.5 times oversubscribed, it's a message that what you have put as a strategy and your communication and your vehicle is superly convenient and accessible. I think the challenge going forward is to ensure how are you able to offer your investor the conveniency and the accessibility. So you are able to have a communication and a vehicle and a channel where you can connect and reciprocate capital and opportunities and returns.
So I'm going to go to the international financiers here. We've heard, and you've cited, we've heard of many new sectors: logistics, education, tech, energy transition, future of healthcare, and many other trends. And the kingdom, with the Vision 2030, is embarking on huge projects, going to require a lot of financing. Local financing, as Fahad said, plus from international financing. Nakamura-san, what is, in your view, and then Tyler and Jim as well, what are the most promising sectors you see in the region? And what are some of the areas that you are interested in? Why don't we start with you, Nakamura-san?
Sure. Investments related to, of course, climate change and energy transition are promising areas for sure on a global scale. And examples include green and blue, hydrogen and ammonia, carbon capture, or energy to waste to energy and the likes. In Saudi Arabia this year, we were honored to take part in the financing of the world's largest utility-scale green hydrogen project led by NEOM and Aqua Power and Air Products, which marks the important step towards the development of this sector. And we are also working on brine and desalination project by NEOM. In December last year, Japan and Saudi Arabia signed a memorandum of cooperation in the areas of circular carbon economy, carbon recycling, clean hydrogen, and fuel ammonia and derivatives. So I hope that we are able to see tangible opportunities coming from this initiative. And on top of these energy-related opportunities, we also see supporting the infrastructure, the development of infrastructure that forms the basis of digital innovation, such as data centers or fiber optic networks and communication satellites as the good investment opportunity. Perhaps a common theme across the board from a financier's perspective is that these financing deals need to be structured as bankable and investable from a perspective of risk and return profile.
Yeah.
I think you've set a great foundation. I think we need a combination of old tools, conventional banking tools, keeping your banks close, as you've suggested, and new tools in order to finance these mega trends. And I think that the kingdom stands out as an environment where there's a degree of reliance on old tools and pushing innovation in new capital markets in order to support the financing needs. And I think that's exciting. There's not another country that I think is providing guidance to the rest of the world on government coordination with financial institutions, with the private sector, with companies, and also aligning with consumers. And I think as a single country, it really stands out where these mega trends are being financed creatively. And it's because of the coordination between the leadership of the public sector, but also the invitation of the private sector that gets us excited about the trends we were talking about.
Very good. Do you want to add, Jen?
Excuse me. I mean, a lot's been covered. The thing that I think has been mentioned but needs to be reemphasized, given the type of investments that we're talking about, longer-term investments, stability is incredibly important, and I think that's what's been, this being my second time here and second time in 6 months, and seeing the determination, the structure, the organization, and the persistence around it makes people feel more comfortable about making longer-term commitments. I think one of the, the challenges when you look at other regions around the world, and it could be individual countries, they have big demands. The problem is the stability of the governments and the focus is what's lacking. And I think this is a great, example of when that determination is made, those decisions are made, that the execution is important, and you have to be there to support it. And I think that's where this, kind of public-private partnership within the region is pretty powerful.
I have here to interject. We have a saying in Arabic, Ras al-Mal Jaban, which means capital is a coward. And I guess you as
Yes.
financiers providing the capital, you want an environment of political stability and
Yes.
good governance and stability.
Yes.
And really, thank you for that. Nakamura-san, we have learned a lot of lessons from the Asian crisis. And by the way, anybody who wants to pitch in on this, which pegged currencies, give us about currencies, do you see under pressure? And what are your predictions? Given all the instabilities, and please, anybody who wants, is there any crisis looming? You don't have to be specific, but your general view coming from Asia.
Yeah, I would just talk about the general views on
Yes.
When Asia crisis happened, I was in Singapore, so I literally experienced the dire situations in the Asian countries. And there are many lessons learned from the crisis, but I think the most critical point for us is that those Asian countries at that time didn't have effective domestic funding or capital markets in local currencies. Namely, they were taking currency and duration mismatch risks at the same time while heavily relying on the cross-border borrowing from abroad in foreign currencies for domestic investment. So after the crisis, Asian countries have been trying very hard to develop their domestic funding market, including bonds and equity markets, in local currencies so that they are able to mobilize local funds for investments in those countries. In general, I think the currency peg is justifiable so far as a country has an abundant export income. But if an economy is to try to diversify away from reliance on export, it is critically important for them to build and expand domestic funding market or capital markets in local currencies so as to mobilize domestic funds and sustain domestic investments in the long run.
Well, thank you very much. We have 2 minutes remaining here, so we have to use them very wisely. Instead of me asking questions, can I just ask each one of you just if you want to say something you didn't want to say on this panel before we sum up. Fahad, quickly, a few minutes.
We're going through abnormal macro political circumstances. I think it is worthwhile to observe where are the opportunities and how much of risk that I can digest with that opportunity. However, as my colleagues mentioned, the new trendy sectors are progressing exponentially, and therefore you may miss the opportunity. It is extremely important to map the opportunities, again, as I started the opening session, the alpha and the beta, and who is supporting you to ensure that you are de-risking or being de-risked throughout the process of putting the investment.
Thank you. Hisham, quickly, please.
I agree with Fahad, but we always see the opportunities during those changes. It was so much boring a couple of years back. Everything makes money. Now you can differentiate and allow the investors to differentiate between good and bad managers. So we use those times to build a track record, and inshallah,
so that's the advice from the investor's point of view. Bankers.
Debt is critical to growth. Most countries and regions that have experienced growth have done it through responsible use of debt. A lot of the developed world is suffering from very high debt to GDP ratios, and that's something that I'm, very concerned about.
I'm the optimist in the group. I think when we take a long-term perspective, even though the world's uncertain right now, I think the opportunities for long-term growth are obvious, and the FII sort of sets the stage, and have been lucky to be coming to the kingdom for many years. But the inspiration that the kingdom is giving right now, with its perspective on being calm, cool, and collected in an otherwise difficult world, and creating a port of stability for economic growth, is very, very encouraging to all of us.
Okay, I agree that we are in a very challenging situation, but I still believe or optimistic that the world has wisdom of sorting out these problems amicably. So I hope that we will be able to navigate this through a global coordination, whether it be public sector or whether it be private sector.
Well, thank you all very much. As you can see, the bankers and the investors, hybrid both. I would have to say we're an optimistic panel, despite all the geopolitics surrounding us. And I think we're seeing rays of hope, or oases of hope, in our region. And that's very heartwarming to hear. It was great to hear that the government is building the infrastructure and taking the initial risk, and would like the private sector to come in and build on that, and we need you, financiers, to help us with that. So please, a big round of applause for a fantastic panelist.